Welcome back. We are still in the topic of budgeting, but now we are going to learn three new things. The first one is the responsibility accounting, the second is budget period, and the third one is issues in budgeting. Let's take a look at each of them. Responsibility accounting. In any organization, having massive amount of transactions, control is inevitable. So you need to have a good control mechanism. So for control purposes, the most effective classification of cost is by responsibility, meaning that according to whether the costs are controllable or uncontrollable by a particular manager who is attached to one particular department. A system of responsibility accounting mainly segregates cost and revenues into areas of responsibility in order to monitor and assess the performance of each part of the organization. So you may want to look at what is the performance of the first department, the second department, and so on and so forth. So why do we need to know about their performance? Because we want to make sure that they are not going to cause problems or losses to the business. So we need to look how much money have they spent in terms of the cost. So in responsibility accounting, we have different centers to assume the accounting functions. We have four basically. The first one is the cost center. Cost center is basically a center that is solely responsible for the incurrence of certain costs. One example for this would be the cleaning services department. So you just need, the people inside that department to do the cleaning. So you need to buy a lot of things for cleaning purposes. So only cost will be relevant there. The second center will be a revenue center. So revenue center is solely responsible for generating sales. A typical revenue center in this category would be sales department. So you may want to enhance the sales so that you maximize the amount of revenue that you make for the business. The third one will be the profit center. This center is responsible for both revenues and expenses, which result in profits and or losses. So it's either profit that you make or losses. So if you have more revenue compared to your expenses, then you tend to generate profits. Otherwise, it will be losses. A typical profit center is product line, for which a product manager is responsible to make sure that they bring profit to that particular department. The next one will be the investment center. So this center is responsible not only for profits, but also for the return on funds invested, meaning that the investment that you have made for the business. A typical investment center, normally we will have a business unit, or if you are dealing with a big organization, then we may have subsidiary. Clearly, budget is very important for all the four centers that we have just described. And when we want to prepare the budget for all these centers, we need to be able to decide what is the best budget period that you want to report, so that you get to know what is the performance like of all these centers. So we need to choose a budget period. So operating budget period of most companies or organizations would normally cover one full fiscal year, although it can also be divided into quarters. So some companies, they report by quarters. So the first quarter, second quarter, third quarter, and fourth quarter. And some companies, they have semi-annual reporting style. So it's up to the organization. But normally we will have one full fiscal year, and then it can also go to the first quarter, second quarter, third quarter, and fourth quarter. And some organizations, they go by monthly. So if you go by monthly, we call that as continuous or perpetual budget. that rolls forward 1 month as the current month is completed. So after this month, then you're going to roll to another month and to the subsequent ones. So these are basically the budget period that you need to decide when you want to prepare a budget report. So it can be monthly, quarterly, or yearly. All right. Obviously, dealing with budget is not an easy task to do. And we need to consider a number of issues in budgeting. For the purpose of your study, we are going to limit to only 3. The first one is self-imposed budget. Self-imposed budget is also known as participatory budget. It is a budget that is prepared with full cooperation, participation of managers at all levels. So meaning that you invite different levels of managers to come and then construct or produce one budget, so that it will be a good mechanism of control that you want to exercise throughout your department. What are the advantages of having this self-imposed budget or participatory budget? First, participants from all level managers can express their own opinions and will be valued by the top management level. And then frontline managers are more accurate than those of top managers because they are part of the day-to-day operations. So you need to listen to them. They might know what happened last year, and then for you to project or to plan for the subsequent period, then they can give a very good input. And then it can also serve as a motivation for individuals to set their own goals. So if they know what is happening in terms of the budget that will craft the future of the business, then they are better aware what will happen, what is the planning of the organization, and they can relate to what they are doing in their day-to-day operations. Nevertheless, there are some disadvantages. One of them would be budget slack. So we're going to consider the second point because it is quite important. So that's why we put as a separate point or issues in budgeting. So budgetary slack is a deliberate practice that involves underestimating budget revenue and overestimating budgeted expenses. So you tend to overstate your cost and understate your revenue. You don't want to show that you have higher revenue. That's why you underreport. And you don't want to have what you call a good amount of cost, meaning that you can control the cost. So you tend to overestimate, so that when it comes to the reality, cost is not as much as you have already anticipated. So what is the problem with budgetary slack? The budget prepared, will not be a good reflection of the current condition of the company. So that will be a problem that we have when we have too much of a slack. The third issue that I want to highlight relates to human factors. We might have a good set of budgets, but this set of budgets will only serve as a threat to employees. You're going to put what is the expectation of the business upon the employees, and it can be very stressful for them. For example, when they anticipate to get some rewards, the bonus especially. So if they cannot meet the target, then they are not going to get the bonus for the year. So this can be a very frustrating experience one can bear. So budget target should therefore be set achievable and something that is manageable by all employees. So I hope that I have already clarify the 3 issues with regard to budgeting, that would be useful for you to understand. Thank you.